Investors, we have a special guest, Mr. Todd Akin from Unconventional Wealth Ideas, and we're going to talk about $100,000 invested into MSTY versus ULTY, which one would win, and we're going to provide you guys a full and complete overview of both of these two great YieldMax ETFs of ULTY and MSTY. Now, I'm going to throw it back to Mr. Todd Akin because he has been a huge advocate, I'd say, for YieldMax, and he has a ton of money invested in YieldMax. So if you guys look at his channel, you're going to see an over $1 million portfolio, maybe some margin, but definitely generating over $500,000 per year in income. So Todd, how are you feeling about MSTY and ULTY and just being on the channel? Welcome back again.
Yeah, thanks for having me again, Marcos. Glad to be here. And I'm loving YieldMax dividends as always. Of course, I combine them with all kinds of things, but loving YieldMax and MSTY and ULTY are definitely large holdings of mine, so I can't wait to break these down some more.
Now we have our first ETF up on the deck of MSTY, so we're going to go over the pros and the cons. So the pros are monthly income. It's going to have some strong performance if MSTR, which is the underlying holding in MSTY, if it is volatile and goes up, you're going to see some strong income as well as some strong total returns for MSTY. Of course, it's going to have higher income because some investors, Todd, I've seen, have been dripping the high income from YieldMax products, especially MSTY, into other ETFs and stocks. Now, I'm going to throw it back to you, Todd. Have you been seeing other investors drip MSTY into other positions? And what do you think about MSTY having some strong performance if MSTR goes up and is volatile?
Yeah, I definitely hear that idea a lot, to take your dividends from MSTY, reinvest them elsewhere, especially if you can get a dip in the market, because that's the best way to cater to your higher performance is to obviously buy on dips. Don't drip automatically, as we always say. Some people do that and they swear by it, but I don't like to drip at the highs. I like to make sure that things are at a discount before I drip, and I don't want extra risk dripping everything with MSTY. So yeah, I'll take the dividends and I'll put them somewhere else if there is a dislocation in the market. And obviously, if MicroStrategy has a big up move, then MSTY is going to benefit. It used to have much bigger moves in the past, as you know, and they're still going to get the daily gains, most of the daily gains from Bitcoin. We've laid this out before, like with MicroStrategy, MSII, MST, they have different cadences on their daily gains just because of their structure, but you're still going to get the day's gains somewhat with MSTY. It's more about the income. I'd say it's more about the combination of the two, and it's a rather conservative vehicle when you're playing MicroStrategy because you're still getting the dividends to cash flow even if you lose.
I definitely agree with that. That's why on the bottom of the pros list, it's less risk, in my opinion, than going all in on MicroStrategy because you are still getting that return of income versus with just strategy, you're only getting share price appreciation in this case. Of course, you're going to get super high yield. The yield right now is about 70% to around 85%. It's definitely been seeing less income compared to last year when MicroStrategy was definitely more volatile, higher implied volatility. Of course, bigger moves last year than this year, which was totally fine. But in my opinion, I think MSTY's a great play, as well as right now we're seeing YieldMax going more out of the money and allowing for more growth and upside than maybe sacrificing that income potential for more growth, which I think is going to be great. You want to definitely see more upside potential with MSTY, and right now YieldMax is doing everything that they can by going more out of the money and increasing their strikes. Now the cons I listed was, of course, higher risk, right? It's going to be more risky than ULTY just because we're betting on one single name, kind of like that old Warren Buffett, I guess, mindset of diversification. But with MSTY, you're only betting on MicroStrategy. Of course, no diversification, single name, but that's okay. Because with investing in MSTY, you're holding one underlying stock, but that can definitely be to your advantage if you have high conviction on Bitcoin, high conviction on strategy, which can outperform other diversified positions by YieldMax like ULTY, like YMAG, like YMAX, etc. No dividend growth, which is not the case for this ETF. definitely not going to be, I say, more of a SCHD, VOO, VIG, DGRO, with that is dividend growth. We're seeing less income compared to last year. We'll touch on it in the later slides, but it's definitely been a big concern for investors. I don't know, what are your thoughts on having less income lately this year compared to last year with MSTY, where it was about $4, then $3, then $2. Now we're in the $1 range for income every single month.
Yeah, I agree. I mean, you hate to see a hit with your income. You know, when you're getting those statements, those weekly dividends or monthly dividends, you know, you hate to see all of a sudden a drop in that. It's very deflating. But at the same time, like you said, they're getting more exposure to the upside, and that's what you really want with Bitcoin. After all, it's not like we're in something like AT&T or McDonald's where, you know, it's just going to have nice returns every year, nothing stellar. But with something like MicroStrategy, it can really change your life. It can change how you get your net worth in this world, because Bitcoin is obviously something that can, you know, make you a fortune if it really is what it's cracked up to be. So if you're going to get that big move, that life-changing move with Bitcoin, MicroStrategy is, you know, one way to play that. And now we can get more participation in the upside despite the lower income.
Definitely. Now, I also wrote down that the downside is high. And I was talking with Jay Pestricelli from YieldMax, and he was telling me that the downside of MSTY is, let's say MSTY goes down 25%, then, or should I say MSTR, 25%. MSTY will go down, he said, 23%. So it's going to be maybe less than MicroStrategy, but you're still, that's a big loss, right? And that's going to be a downside of investing in MSTY. Of course, capped upside. We're selling call options. You're going to be capping your upside. Someone else is taking the benefit of the later appreciation in the underlying. And there's no hedging inside of strategy, or should I say MSTY, which is completely fine. But there is a way to hedge against MSTY with WNTR, ticker symbol winner. And I know you like winner a lot, so I'm going to throw it back to you on why you like winner to hedge with MSTY.
Obviously, we want the most income to live financially free out of our brokerage accounts. And if these funds erode and goes kind of sideways to down over time, of course, we get our day's gains, but over time, they don't really compound. So if they erode, why not neutralize the risk in the two? Why not have MSTY and winter? Because if they neutralize each other, then obviously you don't have any risk to your day's gains ability. You have minimal risk. The tracking is sometimes not one for one exactly, but they performed pretty well during the recent crash when MSTY was down 10%. Winter would be up around 10%, you know, so there was good tracking there. And again, these things erode long term. So why not just cancel out the risk, buy both winter and MSTY? But then to get your upside, we've always talked about using MIST. You can buy the stock outright, MSTR. Some people sell puts, or you can also get the balance in between the two, MSII. And so I use MSTY with winter to just neutralize risk, get extra income, really snowball our income, pay down our margin so fast that we're actually growing our account faster than most people will grow, because margin acts as a second account in your account. So whatever you're using with margin, you're getting that same amount of growth with your account. You're getting extra growth. So the dividends from these two combined are so large, MSTY and winter, that we just grow our account regardless of what the market's doing, because our margin's getting paid down. Just as a period of your margin getting paid down, your account grows by the equivalent amount. So you're getting extra growth there. It's almost engineered growth without the risk. They're both neutralized.
We are moving on to ULTY. The pros, of course, is a weekly income. Diversification, which I like a lot. You have around 15 to 30 different securities or stocks, and it does operate like a hedge fund. That's what Mr. Jay Pestricelli told me from YieldMax, that ULTY is kind of like a mini hedge fund. And the reason why is because, of course, active management, they're definitely going to be cutting positions, increasing positions, or maybe just going in and looking for new positions that have high implied volatility. Now, the problem with MSTY is that if it has lower implied volatility, you might see less income, or you will see less income, and maybe less upside from less IV. However, with ULTY, what I like about it is the fact that ULTY operates like a hedge fund. It's going to be picking stocks that have higher implied volatility to hopefully capture some solid income every single week and to hopefully have that income stay high, remain high, and appreciate maybe in the NAV or maybe stay stable because we know that ULTY's NAV was horrible since inception. And then now with this new strategy of actually holding the underlying stocks, it's now hedging within the portfolio. So there is now hedging within ULTY, which is a new strategy within ULTY to hopefully fix the problems of the NAV decay. It's going to have, of course, better implied volatility, active management, kind of everything you want from an income product. And I think that ULTY is kind of like the best thing since YieldMax, in my opinion. Of course, we're going to have a super high yield, 70% to 85%. It's going to be less risky than going all in on MSTY because we have diversification, many different names. However, though, I will say maybe you might disagree or agree with me that yes, we are diversified to many different names, but these are going to be super high moving, highly volatile, maybe speculative names, maybe some that are going to be some great picks. But I want to let you talk about what you think about the pros of MSTY that I just said, and is it accurate what I just said about ULTY?
I think you nailed it once again, Marcos. These slides you give are absolutely money because they really lay out what's going on within the funds. A lot of people are interested in that. You know, what I do is a lot of just, okay, how does the fund trade? Like, what's the price action of the fund? How does it work within a totally diversified portfolio? The price action is the true judge and jury. But when you lay out these details, they're very helpful because you need to understand what you have in these funds so that you can have more conviction behind them and own them with confidence. And with ULTY, you have the diversification of 15 to 30 as you laid out. And we were going over some of those holdings before this podcast. Holdings like, MicroStrategy that are in ULTY, holdings like the indexes themselves. You have TQQ, you have the NASDAQ, and some leverage funds that I like to use personally. It has a little bit of everything. It has Tesla. It has stocks that are even looking like they're breaking out maybe, and they've been in a slump for a while, like AI, C3 AI. You have some speculative names in there like HIMS and some other semiconductors names, but you also have some really high quality names in ULTY, and they're each hedged out. You have a call with them, you have the puts with them, they're hedged out, so that you have that downside protection. It's just that, like you said, the cons are, it's probably not going to move like a MSTY could move by itself. If MSTY has a big day, then you're not going to see quite that kind of a move in ULTY. But we've seen some big moves in ULTY. You saw it was up 2% yesterday, roughly 1.7, and it was beating the market. And we've talked about how it's kind of like a glorified CD account in a sense. Instead of getting 5%, you're getting an 80% yield, and it's just going sideways now. So you're not really going to get that upside like you would maybe with the MicroStrategy by itself. But even MSTY has kind of tended to go sideways, a little bit because of the change in its structure. So I've been going a lot more into ULTY, and I know a lot of people are doing the same thing. I would guess for the same reasons. You like MicroStrategy, but it's a little risky to put it all in one name. So you can kind of get the diversification and a little bit of everything with ULTY. You're still going to get some nice days gains that don't compound. So we always talk about combining other growth vehicles at the channel to get your compounding growth. But you're getting really nice, stable returns by the looks of that chart. You have really quality holdings, high quality holdings within ULTY, even though some are speculative, some are really high quality, like a Tesla. It's a top, player in the index. And so I like both. They both serve a different purpose, obviously, because one's more tied to Bitcoin, which is an asset class you have to have your own diversification to within in your portfolio. They say to have 3 to 5% of Bitcoin at all times. Anyway, ULTY is more diversified. So there are pros and cons to both, but I like having them both, that's for sure.
With the cons, of course, still high risk, right? We're going to be holding maybe some speculative names. Maybe we don't have any large cap value. Like there's no Pepsi, there's no Coca-Cola, there's no bonds, there's no those more safer picks in the indexes, right? No Apple, maybe no Microsoft in ULTY, which is fine, but it's going to be less risky, in my opinion, than going in on MSTY because of different names. Of course, it can underperform MSTY because MSTY will have larger moves than ULTY most of the time. No dividend growth, which is fine. We have high income, still high downside though, but it's going to be less than MSTY in my opinion because of that active hedging within ULTY from the puts now that they are implementing from YieldMax into ULTY. Of course, capped upside with cover calls, which is completely fine if we're going to get super high income every single week. And I put that it could still get clapped if they have a bad pick. Because with ULTY, sometimes they bet on stocks before earnings come out. And this could be either a great idea or a bad idea. We saw them at Nike, and then Nike just went up 22% in the last month. We saw them do this with a lot of other holdings. But in terms of the other way around, right? You can see Upstart, that's a top holding in ULTY. We've seen that stock just fly down like 50% in a short period of time. So, but the good thing about ULTY is the fact that it does have those puts. And of course, not one position is super exposed in the portfolio, which I like. And this is not a con, but they do recommend, or should I say, Jay does recommend and say, not recommend, but says that if you want to hedge with ULTY or against ULTY, to buy an ETF like YQQQ, which is the short of the NASDAQ 100. And it's not going to be a perfect one for one because ULTY doesn't have 100 NASDAQ stocks, but that's the next best pick. So I don't know what are your thoughts on this last slide of ULTY.
Yeah, I'm glad you asked me that, Marcus, because I have YQQ. That's a hedge of ours, obviously, at my channel. It gives you some income while you're, waiting for a market drop. It's not going to give you huge gains, YQQ, if the market were to crash, like you could get with something like options, which is what I use options at my channel because markets stair step up and they elevator down, and something like an ULTY did have considerable downside when the market fell, and I must admit it performed well during that recent crash. But had you had options on, you would have made thousands of percent returns, and that's something I specialize in my channel. And even though you have the puts within ULTY that shield some of that downside, if you're going to put a lot of money in ULTY to matter because you want this income so you can survive on it, well, then you need to do a little more protecting, in my opinion. Of course, we don't give financial advice. We just share what works with us. But I think that the put options are a much better way to gain access to the downside should the bottom just fall out of the market. Same for ULTY. If the bottom just were to fall out of it, it's going sideways, the bottom falls out. YQQ is going to help some. But if you have a lot of money in ULTY, once again, you're going to have a lot of money in YQQ to offset that. And YQQ is pretty high maintenance. So is ULTY. If you have both funds and you're using all of your capital to hedge YQQ with ULTY, then you're going to suck up all of your equity. And we know that what we're trying to do is live financially free out of our brokerage accounts, always using the power of maintenance and equity in our accounts. And so options allow you to preserve a lot of your equity, use a small amount of money, preserve your risk for downside hedge protection, and you can therefore offset ULTY in a crash, and YQQ will still be nice for you. It'll still give you that income, but it's just not going to exponentially grow like your options could to protect ULTY since you had so much in it.
Let's talk about ULTY's top 15 holdings. Of course, it doesn't have 15 names, but I think that the top 15 are going to be super, I guess, a good talking point for ULTY's holdings. Of course, it's not too concentrated to one stock like MSTY, but we do have strategy at number 13. This is as of June 27th of 2025. And this is number 13 is going to be strategy at a 3.6% allocation in weighting into ULTY. And like I said before, it low-key does bet on earnings, which could be a good thing if earnings are beat in the market, or should I say the underlying stock goes up, and a bad thing if it goes down, but less bad because now they're doing hedging, they're doing the calls and the puts, which is a great idea from YieldMax. Of course, we're going to have high implied volatility names. Implied volatility and high are the keywords for a great income stream from YieldMax, especially with ULTY and MSTY, because if we see a lower IV, we're going to see less income, and that's not what people want. They want high income. We're going to see large upside, large downside, and large income if we have some high implied volatility with the underlying holdings in ULTY and even with other YieldMax names. But we see some really good names. We got Palantir, Coinbase, IonQ, Strategy, SMCI, Tesla. They got TQQQ, which is a great holding because that's a leveraged version of the Qs, which can have more implied volatility. That's going to be what would it technically be 3x than the Qs from implied volatility standpoint. Upstart, Robinhood is a great pick, Reddit, AST. So what are your thoughts, Todd, on the top 15 names in ULTY?
Oh, wow. I love breaking down these holdings because a lot of them are so sexy. I mean, you have Tesla in there, you have, to me, TQQ is always an attractive play. Palantir, a hot name, but they're not only just, hot names, they're not just meme stocks. Palantir is a top holding now in the index, in the NASDAQ. It's a top holding, it's a top 20. I believe it was 13. And it's also a top, I think, 50 in the S&P, Palantir is. So you have not only these names that have potential for huge runs, but they have the high IV, which is what we need to generate that income. Whatever the IV is essentially what the dividend yield will be, or distribution, whatever you want to call it. And if we have high IV with the chance of a breakout in some of these names, high dividend yields with a chance of a breakout, which again, it seems like Jay's trying to do some timing like you were saying. And I mean, if you go look at a chart right now of even Palantir had a nice pullback recently. And of course, we were buying that dip at the channel this week, but it's had a nice bounce back. It looks like Jay is, as you said, when he's timing Nike, which by the way is still really cheap and looks good on the chart even after that little run, we added that back in. You have the potential for more upside in these names. Tesla looks good on a chart right now. I've been adding to that like crazy. I've been alerting all my members today about Tesla, trying to play it in a multitude of ways, which I'll discuss in the next video, probably after this, the video we just released. I'll do one on Tesla, just because there's a lot to be said right now for Tesla and, being a granny pick. If you're a Tom Lee fan, it's a granny shot. And so Tesla looks attractive. It could break out. It has high IV. It's 5% of the weighting there. 5% is pretty substantial. And then you have ASTS, which I was just looking at before this podcast. And as you can see, I mean, they try to go, it looks like between 3 and 5%. The government obligations, the treasuries and all that, that's 7% for, shielding the volatility. It minimizes some of the volatility, shields, takes some of the risk out of the fund, obviously, gives it extra cash flow. But ASTS also looks like it had a potential for a breakout on the chart. So, I mean, we're not chartists here. We're not trying to trade things based on timing. 90% of traders lose over time. But what you can do is let your dividends cash flow all of your losses and try to buy on the charts at the most opportune times for the long term. We're not trying to trade these things short term. And, obviously ASTS, some of these names that they're putting into ULTY have good entry points right here, coincidentally. And that could help with more days gains potential in ULTY. We could see explosive moves in ULTY. When semiconductors were rallying, something like an SMCI, when that rallies, I mean, that thing can move 10 to 20% in a day, which can move this fund up 1 or 2%. So when all these things are moving like they are, like they're capable of moving, you can get 2 to 3 to 4% moves up in ULTY, and then it just gets capped after the dividend's released. But that's okay because you're able to, as I was saying in the last video on ULTY, you're able to withdraw out of your equity if you use margin like you do at my channel, and you're trying to live out of your equity. You're getting days gains from ULTY that doesn't last long term, but daily they do. So you can actually live on that somewhat as a paycheck. But there are nuances. Obviously, we have a complete approach at our channel. We have many funds in the portfolio that all contribute to our days gains that we can withdraw from. But with ULTY, I mean, it's just a great vehicle. It's really hard to find anything wrong with ULTY. It has great names, index names, quality names, some speculative, some not, potential breakout moments, high IV. But it has high breakout potential at some of these moments in their charts, high IV, and they have protective puts. So to me, ULTY, and it has a diversification of all the names. So ULTY is a great name for us to be able to put a lot of money in and feel good behind it, as long as we're hedged to the downside with those options and YQQ.
expense ratio and yield. This will be kind of a quicker one, but MSTY right now has a yield of about 72.74%. We have ULTY with the higher yield of 78.58%. So a little bit more of a higher yield. Of course, the expense ratio winner is going to go with MSTY at 0.99%. And the expense ratio for ULTY is going to be 1.3%. So you are getting a little bit more yield even though it is more expensive to hold ULTY, but in my opinion, that's not going to be a big of a deal. I guess you're going to have more income with ULTY because of the higher implied volatility. But if strategy goes down in IV, MSTY's yield will go down, but ULTY should, in my opinion, hold strong, if not go up. I'd say let's hold strong for now. I don't want to be too bullish on the yield, but what are your thoughts, Todd?
Yeah, it's good that you put these slides up for expense ratios because old-fashioned investors especially will swear by expense ratios and, Jack Vogel, famous ETF founder, find yourself, even Buffett says, find yourself, a good index fund with a low expense ratio. And I agree with that, but they're always talking about capital gains and funds that didn't have the high yields perhaps. And well, obviously, I mean, you look at an SPY, there is no yield really to speak of there. It's like 2 or 3%. So when you have an expense ratio, that's going to cut into some of your, profits when you have such little return, such little dividend yield and such little return potential with the underlying itself. But with these yields, they're so high that to me the expense ratios are negligible. I'm always buying the dips, reloading, snowballing my income further, and they have such a potential for upside moves that I'm also sacrificing the expense ratio for the high yield and the potential for a big move. So to me, it's kind of negligible at the end of the day.
MSTY dividend. This is super important. Everybody's been predicting the dividend, or should I say the income, the premiums for MSTY in the next 4 weeks. But we're looking at the chart, Todd. We're looking at $4 in November of last year. We're looking at $4 in May of last year. And then it went to 3.5, 2, spiked up a little bit in November. And then since then, it's just been a downward staircase, kind of back up a little bit in May of this year, and then back down to, let's say, $1 and some change. So we're seeing less implied volatility with MSTY. And that's fine if we're going to see some upside appreciation, but that's not been the case with strategy stock. It's been not performing the best in the last month. But in terms of total returns, MSTY has been crushing it, and we will get to that for the total returns. But we're definitely seeing, I guess, a mature business with strategy. It's not, I guess, a speculative name since inception back in the day. And in my opinion, dividend is cool, but we should be looking at total returns for MSTY instead of just the income, which that's my opinion. But I want to let you speak on your thoughts on the dividend from what it used to be and what we might expect in the future, because I say my prediction was about $1 and some change up to $2 is my prediction for the MSTY dividend, I guess, for the future. Of course, there might be reverse splits, so maybe the income might be changed, but let's say for me, 1.5 to $2 every 4 weeks for MSTY.
I was pulling up a chart as you were going over this slide, and I was just looking at a chart trying to line up the highs and the lows with the dividend payouts. And I know they changed their structure, but when it comes to options, a lot of times you'll see these higher dividend payouts with when you have a higher move in the stock itself. And lately, MicroStrategy has just been going sideways. It's just been meandering sideways as I'm looking at that chart there. A lot of times that compresses volatility some, and it'll lower your volatility, and it's going to lead to lower payouts. So to me, I understand that they're going to have lower payouts just because they changed their structure. But if MSTY or MicroStrategy were to have a monster move up like it's capable of doing in the past, then I think you would see a dividend increase, obviously. And it's just a matter of when this thing breaks out, because then the volatility will expand. And I'm sure Jay would allow us to get either participation in that upside through the capital gains, or he'll give it to us in the form of a dividend. So I just think we need this. We need MicroStrategy to materialize on its chart and expand in volatility, and then we'll see either higher payouts or more cap gains.
The ULTY dividend is super interesting. So it was $1 range for income every single month, and then we were seeing it stair stepping down to down, down, down. Now it switched to weekly, and we're seeing about 8 cents, 9 cents, 10 cents, 11 cents. Some people might say that that's low for income, but if the ULTY price is $6, then that's high income. If we're looking at a 75, 80% yield on ULTY, I'd say that that's pretty fair. And the share price of MSTY, we'll get to that in a second. But the ULTY dividend, I'd say, is been great. We're seeing more stable NAV lately in the last month since the strategic changes in ULTY. We're seeing good income. Like you said before, it's kind of been teetering like a CD per se, with stable NAV, high income, some upside in appreciation from total returns from you saw $5 up to $6 from that movement. And I think ULTY dividend is going to be a great one in the future from that active management, higher implied volatility. And honestly, I'm more excited for the ULTY dividend than MSTY. And I'll throw it back to you, Todd.
I am too, just because there are so many names that can plug into ULTY to get that higher RV and give us a larger distribution. And it's funny how when you look at that chart of the dividend history, how it almost coincides with the stock chart itself. You know, they look almost identical. And yeah, even though this share price is below 10 a share, a lot of people think, oh man, this is just going to go to zero. What's going to happen? I get that question all the time. And I'm always thinking, well, he'll either do a stock split, reverse split, and then obviously you'll have a higher share price, lower payout, but it's the same dividend yield. You know, it's always the same. If ULTY ends up doing a reverse split, then you're going to see the look of your dividend change. It's going to be a different dollar amount, but the percentage is going to stay the same. So I never understand people who have fears about reverse splits because it's just a cosmetic change. Nothing changes with the fund's yield itself. So if they do a reverse split, then we're just going to increase, by the way, our available withdrawal, because when share prices get too low, it makes the maintenance requirement go up for them. And when you get a reverse split, that raises the share price and then that lowers your maintenance, which then raises your equity. We talk all about that at the channel. And if they don't do a reverse split, then you're just going to continue to see a lower share price, but you're going to get the same dividend payout. Okay, the dollars and the cents might change, but the percentage, the yield does not change. So I'm happy either way. And if we have a reverse split, even better.
Let's look at the 1 year performance of the winner. So we're going to look at the last year. We see MSTY is up on a total return basis. You're not going to see this chart on Robinhood, on Google. You're not going to see it on Moomoo, on Public. You're only going to see these total return charts, to my knowledge, on Yahoo, as well as on Seeking Alpha. So I'm using Seeking Alpha. And we're going to see right now MSTY up over 130% in the last year, which is crazy. And then ULTY is up 14.83%. And some people might be looking at that like, why would I own ULTY if it was underperforming MSTY? But these strategic changes in ULTY were just implemented recently. I'd say maybe just this year. But I'd say that it's true. You know, MSTY, you're taking on more risk. There's more reward. There's more upside with MSTY just because you are betting on strategy. If you love Bitcoin, if you love a leveraged Bitcoin proxy, MSTY does have the best upside compared to ULTY. And ULTY shouldn't be a name that you shy away from. I think it could be a great name to pair with ULTY, or should I say MSTY, and other YieldMax names, you know, PLTY, HOOY, GUI, AMZ, Coney, Tesla, etc. I think that ULTY and MSTY do belong in a portfolio if you do like YieldMax. But of course, we are not financial advisors. We are not advocating for anything. Do your own research. But I'm going to throw it back to you, Todd. What do you think about this chart of performance from MSTY versus ULTY?
Yeah, it's an interesting chart. I mean, it's not too surprising. You know that MicroStrategy is going to have much more upside ability, and it still has that large dividend. And ULTY, they just now made their changes, but also ULTY is diversified, so it's harder to move the needle with ULTY. And so with MSTY, you're going to see that extra performance. Obviously, ULTY, it has lower performance, more diversification, so I can put more money behind it and actually make more dollars, even though it's only up 14% versus MSTY up 100%. If you put $100,000 into something and it moves up 10%, then that's $10,000. Or you could put $10,000 into MSTY, it goes up 100%, you make $10,000. So for me, I can make more money or the same amount of dollars, if not more, if I put more money behind something, and I feel safer putting more money behind ULTY than I can MSTY. And so that's how I'm actually making more dollars and ultimately more performance gains at my account, even though it's not running the same as MSTY using ULTY. You know, that's how I'm actually outperforming. We're up 16% year to date. And it's because I'm able to concentrate a large amount of my dollars behind ULTY, behind Cornerstone, and all these other funds that we use. I can put a lot of money behind them and get smaller returns and still make the same amount of money, if not more, than I can with MSTY, even though I love MSTY.
So what is the winner, Todd, of MSTY versus ULTY? People are taking out loans, credit cards. I was talking with Jay about this, about how he felt about people taking out credit card debt, margin, selling their house, putting up their mortgage on it, getting a HELOC loan. And you'll see my interview with Jay Petrocelli from YieldMax about everything from the strategies in ULTY and MSTY. What are his thoughts on living off of these income products? What are his thoughts on people taking out debt for him? It's honestly, I'd say, one of the best interviews I've ever had, but let's kind of dial it back into the winner, MSTY versus ULTY. I'd say if I were to choose just one, I'd go with ULTY. I'm going to veer on the side of less risk and solid reward. Strategy's already in ULTY. There's active management. I'd say it's more stable than MSTY. It could be a better play long-term than MSTY. But long-term, though, I wouldn't be surprised, and I probably will be wrong, that MSTY will outperform ULTY long-term, which is fine because I am a lower risk investor when it comes to these products. So I'm going to throw it back to you, Todd, on what you think about MSTY versus ULTY. Would you choose just one? Or on the bottom, I put, would you play both? And what other ETFs do you like by YieldMax?
Great questions. ULTY, as we were saying earlier in this video, throughout all the slides, I have to pick ULTY as my winner over MSTY just because it's diversified. I can concentrate more capital behind it, sleep at night. It has protective measures within it. And as we were just saying, it's easier to make money when you have a lot of money in something. You can get less returns and still make even more dollars. You can get less percentage returns, make more dollars with having more money concentrated behind something. And so with ULTY, I feel more comfortable putting my money behind that. It has MSTY MicroStrategy within it, so you're kind of getting best of both worlds. And if you're trying to go for a major move to the upside, you're really not even going to get that with MSTY unless Bitcoin has a unique period where it breaks out and you can capture those gains. But long term, you see the chart of MSTY, it erodes just like ULTY erodes. So if they're both going to erode and they both have a similar yield, why not go with the one with more diversification, compounding off of a larger position than you could a smaller position? And then would I use both? I absolutely use both, though, because you need to have Bitcoin exposure, but it's about how you allocate those. Obviously, we have more allocated in ULTY than we would MSTY. And then as far as other YieldMax funds go to combine with MSTY and ULTY to get extra performance, you know that I hold pretty much the entire suite of their funds. So it's about, and I hold a lot of the holdings within ULTY in my portfolio, the triple C's, as I always call them, those triple leverage TQQ, U Pros. So I use that as well for my capital gains. Everything that you need is almost in ULTY, and if you break it down into all of its various pieces, you can own them individually and get even more performance out of ULTY should you just own the underlying holdings out of ULTY. And then you do all this with the same yield, less risk than owning MSTY outright. Although still own some MSTY just for your Bitcoin exposure. You never know. You don't want to have FOMO to Bitcoin. But if you're going to use MSTY as your sole Bitcoin vehicle, try to combine it with the other vehicles that we've mentioned in our podcast, like MSII and MST.
So final verdict for you is both?
Both and more. Both and more.
Thank you guys so much for watching this video. If you guys like this video, please give it a like because this cute puppy did. And don't forget to check out our last discussion with Mr. Todd Aiken right here or right here. I love you guys so much. Crush the stock market and take it easy. Peace.
Take care, everyone. Bye-bye.